The second half of the year is upon us, and tonight is going to be exciting because we give you the ASX stocks that are showing potential to rise 100% and more in the second half of the year. We break down all the key market drivers that will impact our market in H2 and show you the key levels you need to watch to navigate these stocks like a pro. With insight from our government-accredited share trading education, which has our experts regularly called upon by major media Australia-wide. I am Philip Tortevsky, joined by senior analysts Janine Cox and Pedro Banales, and we are Wealth Within. Good evening.
Good evening.
Nice to have you back on. Another big week, RBA decision coming.
Interesting times, isn't it?
It sure is.
The decision that was made. Well, we're going to talk about that later, aren't we?
We are, and we've definitely got some amazing stocks that do have the potential for massive, massive upside. But before we move on, let's just quickly say hello. Pedro, how you going, mate?
Yeah, very good. Phil, great to be back with you guys. I'm excited for this show because there's some interesting stocks that I'm looking forward to looking at.
Yeah, well, the pressure's on. Anytime we see 100% upside, we got to deliver. So let's get right into it now with the second half of the year right around the corner. How would you assess our market during the first half, and what should we expect in the second half of the year in terms of performance, Janine? I mean, what kind of story have we had this year so far, and where are we going?
Look, it's been fairly flat and lacklustre.
Yeah.
But I think it's turning a corner now. We've just seen a couple of moves up on our market, and I think that's the start of something good.
Yeah. Just quickly, the two biggest drivers I think this year we've had. Tech has been the big story out in the US, the boom in AI, and we've had the war. Now we're seeing a potential to the end of this war. Is that one major tick for markets, or is it more going to be the concern or what happens with the tech in the second half?
I think it's all about the tech still.
Yeah.
That's the one that sells, isn't it? The sexy side of the market sells, that's it.
Yeah, fantastic. All right, now diving a little bit deeper, it is safe to say that markets this year have been primarily driven by the US-Iran war and oil price volatility, plus, as mentioned, the tech hype leading out in the US. But for the second half, where should investors focus their attention in terms of market shifting events? Pedro, I want to bring you in, mate, and get your thoughts, because we have seen some sectors start to bring life like REITs and healthcare. But what do you see the outlook being for this second half, and where should investors be looking?
Yeah, well, look, in the concept of the Australian market, there's been several sectors that have been sold off, and that's primarily been because of those world events. So if we do see an end to this conflict, and I hope that we are at the end of this, then we're looking at companies that are going to benefit from that lower oil price. And that's technology in our sector. Technology, like Janine said, has already been flying in America. I'd also be looking at ones that may benefit from lower interest rates, because if we do see inflation start to slow down, then we may see some interest rate cuts coming maybe at the end of the year, possibly at the start of next year. So I'd be looking at REITs. I'd also be looking at the discretionary sector. We've seen that start to show some signs of life, and healthcare as well. And we're going to be covering an interesting healthcare stock later on that I think it's looking really nice. So I think that sector's been beaten down quite badly. And I'd also be looking at some of the utility sectors as well, as we start to see that energy story come into play. And when I talk about energy, I'm not talking about oil and things like that. I'm talking about energy production domestically.
Yeah, fantastic. All right, well, let's get to the fun stuff, Janine.
Oh, I'm looking
Stocks.
forward to this one.
Yeah.
It's always exciting when we put up that 100, isn't it?
It is.
All right, so come on, everybody, let's have a look. We've got Santa Barbara Limited, SVM. Now, this one looks really fantastic. I mean, this is a classic setup. We're seeing this on a lot of stocks at the moment, where we get these bounces off the low and then really nice moves up just to prove that it's on its way. And at the moment, Santa Barbara is just coming back to an interesting line of support. We can see it there, and it's traded up to the top of the line so far. If I grab that one there, you can see the move is not out of the ordinary. It's just a nice little trend up. It could come back a little bit further to test that as part of this, but so far it's holding up really nicely. Now, what has it done after it's come off these lows here? Well, a bit of consolidation, a little bit of a test, which I think we're going through now, and then a big move up. It's so different to what we saw back here that I just think that it looks really good. And look, in terms of the upside potential when it gets going, depending on what your strategy is. Now, this is a big question, isn't it? Because, you know, the strategy can determine your outcome. It's something that's a big decision for a lot of traders, even trained ones. So if we're looking at waiting for it to get through the top of that, then, you know, we've got potentially somewhere between 60 and 80% as an opportunity here once it gets into that full-blown trend. But even before that, for short-term traders looking for, you know, turnaround, you know, around 54%. So will it get to that 100%? Possibly. I mean, it could even go more than that as time goes on.
And even from that second level you've got there, that shorter-term play, you know, you're looking at 60 cents to get to $1.20 is pretty much where that stock's been you know, running to from these lows. So it's very realistic.
It could realistically get to that 120. I mean, we've got a nice level across here. If we pull that across there, we can see that's just around about that 100, 110, maybe a little bit closer to 120, if I can grab that line there. So, you know, where you have it, it's pretty much double from the current close, isn't it?
Yeah, fantastic. Pedro, did you want to add some thoughts on this one? Because gold, it's been such an interesting story. I mean, we saw it as a hedge. We saw it go for a big run during the conflict. Now we have seen gold sold off quite strongly over the past couple of months. And today we sit in a situation where gold is still not yet found that turnaround story. But St. Barbara's looks like it's starting to make that story early, which is very interesting.
Yeah, it is. And this company has come out with some pretty good news. They've received funding, I believe. And I believe that they are based in, they've got mines in New Zealand. So they are, and many gold producers actually mine copper as well. So that could be a bit of a tailwind behind, you know, these type of gold companies. And I think that the chart is going to lead the story, if you will. So the fact that it is holding up and actually that it's closing to the high of the month while gold is having a bit of a retracement, I think that is a very good sign. And I don't think that the run on gold is over yet. I think it's just consolidating a little bit. Once we start printing money again, which is a given, it's not going to stop. Especially if we do go on an easing cycle and in the US as well, then we could see higher gold, and obviously that would bode well for Santa Barbara. So if that does happen, and you know the stories about the debt in America, that it has gotten quite high, and it's they can't even service it. So for that to happen, I think that they are going to have to print their way out of this. So printing more, good for gold equals good for Santa Barbara. And my level would be the first projection. I would say that it can actually run to about that $1.10. So from the current level, that's about 75% until it reaches its, you know, that short-term resistance. And then it could actually run a lot higher, like Janine was saying before, and it could actually go a further 44 to 45% upside. So I actually do quite like it. It's quite a cyclical stock. If you look at it from the monthly perspective, we've got a low back in 2003, then around 10 years later, we've got another low, and look at that, 10 years later, we've got another low. So if that's any indication, from low to high, that's about 1,900%. From low to high, 7,000%. So what is it going to do now? Well, you know, hopefully it's around that 1,000% from that low. So there's still nice chunks of gains to be made. Yeah,
and I mean, look, this isn't the first stock that's run thousands of percent we've shown on this show. So the one of those could very well pay for a great amount of education to get you professional and finding those opportunities in the market on your own. But before you do look at the courses, check this book out, How to Beat the Managed Funds by 20%. It is free. You just have to pay the shipping. It's from Dale Gillham. The link is in the description in this video below. But as mentioned, if you do want to find opportunities like we show week in, week out on this show on YouTube, go and visit the website wealthwithin.com.au and look at our government accredited diploma of share trading and investment. You will not find another like it. And check the testimonials out as well to see what our students are doing. Amazing results at the moment. But let's get to our next stock. Pedro, take it away, mate. WiseTech, this one is a very interesting play.
It is, and it's a company that's in the logistics space. So if we do see that reopening of the Strait of Hormuz and we start to see ships start to flow again, and that this is another beneficiary of that stop to the conflict, and also being one of the major players in our technology sector, this is going to be the first one that I'd be looking at in the technology space for a turnaround. It's actually been beaten down quite badly, and it's a very good company. So I've put a line here, support level at around that $35. It was roughly the all-time high back here in 2019, and it was a level that it actually struggled to get through during 2021. It broke above it, came back, tested it in 2022, and then just took off and established that beautiful uptrend that I hope that many of you were able to capture. I know that some of our students were emailing in about this during 2022, 2023. They were having a great time trading it. Obviously, you could have managed it very nicely just using that momentum line there. And there's also other kind of topping patterns that you could have used to manage and to add further confluence that this was going to be on that long-term downtrend. But at the moment, I'm thinking 35 is a very strong base for it. You can see that it's actually slowed down. There was these sharp movements down. It started to consolidate sideways. Now there's a bit of indecision. It's closing low, then closing high, closing low. It looks like a bit of a sideways kind of accumulation period there. Now, one final thing here on the monthly chart is that there's a secret momentum, if I can say it in that way, that has been established since back here in 2017. It's actually found support back here in 2018 and took off, and it managed to find some feet around it in 2020, and then accelerated away from it, but it's come back to it. And have a look at how much pinpoint accuracy that is when you know what you're looking for and what you're looking at on the technicals. Price and time are both aligned there, and so I'd be looking definitely for a turn. Just finally, volume is nice and high here, so very liquid. I think that this one is on the precipice of a turnaround. Yeah,
a lot of ticks on that stock right there, but let's get to the next one, Janine. See if you can top that.
All right. It's a big call, call. All right, WA1. Now, we've got this WA1 Resources. Now, there's not a lot of history on this stock, which can often present some challenges, but can also be a good thing and make it easier sometimes to trade. Just looking at the angle of the trend coming up, it's nice. It looks like it's reversed off this low. And often these patterns we see at certain parts of the cycle or overall cycle, and we've seen it meet resistance around 630, 640, which, I'd like to see it get through that level, but if it does that, it's quite easy for this stock to get at least to this next level and beyond. So from the current price, there's 100% to that point there. But, how would you trade it? That's really the question. Jumping in right now at the highest risk possible time when it could just do a backflip and fall. I'd rather actually see this, move up, to test this level, and then if it slows down a little bit, then don't worry about it. Just let it unfold. Let others take the highest risk time to be in it, and then let's see if it goes through that level, pulls back a bit, and then we get this break to the high. I mean, that would be the my mouse has just gone crazy. That would be the ideal scenario to see that unfold.
Yeah, it's so important what you're talking about, because so many would look at that and go, hang on, it looks like it's found support, buyers have come in, it's on that trend, I'm just going to buy.
But that's still falling.
It's those little nuances, isn't it, that things we do teach, those little nuances that make all the difference to your trading. Keep in mind what Janine said, that's very important. But let's get to our next one, IPH. Pedro, another potential for a big turnaround.
It sure is. This one has received a 5-star rating in Morningstar, and the fundamentals are looking nice. It's IPH Limited, like you mentioned. It's a financial play. They're basically their expertise is in the intellectual property, so IP and things like that. And I'll actually put expand out the monthly chart here, and I've marked out these 3 levels. So I've got $3, $6, and $9, which I think that is a viable range for this stock. And you can see that I haven't actually exactly pinpointed the exact highs and the exact lows, but you can see that that's kind of, the ranges that we're looking at the moment. And at the moment, it's trading at $4. And I think that the next resistance will be at around that $6, which equals roughly around that 40% upside until it hits that first hurdle. But if it does get to that $9, which it has spent a fair bit of time trying to get past, and there were traders willing to buy it and trade it at those levels, so it's not unlikely that it will get there, then it will offer that 100% upside. So one simple way of looking at this is just establishing a simple momentum. It depends how tight you wanted that momentum to be. If it was fairly tight, like I've put it there, then you can say that it has broken that. If you wanted to incorporate some other price action, then it hasn't broken above it. So, but that really depends on your how conservative you are as a trader. And of course, we go deeper into all these types of strategies in the course, and how to actually determine with using rules. So then you're not always thinking subjectively. You can't say, oh, well, this time I'll put it like this and this time I'll put it like that. No, there's rules that you can follow. So then you're always applying it using a strategy, and you can backtest that strategy, and you're able to trade with more confidence in future. So I think that 100% is not unlikely for this one. It is another type of cyclical play. We've got 2018 on that low, 2026 in that low, and then we've got 2003 on that low. It looks like it's a very different company to what it was back here in 2003. A lot more volatile and a lot more trading action. So this one's great for volatility, and that's what really you like and what you would want as a trader.
Yeah, fantastic. All right, well, we are going to get into some more amazing stocks, so stick around. But coming up next is our trending topic, Janine.
Yeah, it's a big one. The big question right now is, have oil prices bottomed, and do lower prices guarantee RBA rate cuts in the second half? Donald Trump stated, "Let the oil flow," as US-Iran peace deal sparked an immediate drop for Brent crude as oil hit a 3-month low. Oil prices have fallen by more than 30% in recent months, and more than 10% of that occurred in the last week, as negotiations between the US and Iran to reach a memorandum of understanding eased fears of a prolonged disruption to global oil supplies. For now, at least, this has changed the inflation outlook and opened the way for the RBA to reverse recent rate hikes. But the debate roars about whether the deal is being exaggerated. Interesting, isn't it? Strip away the diplomatic fanfare and the financial benefits to Iran, and the agreement largely restores conditions that existed before the conflict escalated. But financial markets like it, as prices react positively to stability. If you are expecting the fall in oil to guarantee the RBA will reverse the last 3 cash rate hikes, you may be disappointed. RBA Governor Michelle Bullock is unlikely to make a knee-jerk reaction. So the decision to keep the cash rate on hold this month came as no surprise. My prediction is that oil will fall again, and I'm going to share where it needs to trade to for the rate cut. Let's go to the charts to have a look. On your screen right now, you're going to see a monthly chart of oil on the left-hand side. Now, this is really interesting to see. We can see the long-term position of oil is tracking between some important levels, and it's around 110 is probably the top end of that, and the lower end is closer to 70. Now, I wouldn't be surprised to see oil come back to somewhere around those levels while all of this fuss is going on. And then stabilise itself. But I wouldn't expect it to get away too quickly in the short term. I think it's probably going to be range bound between 70 and 90, and more likely hanging closer to that 80 mark after it hits that bottom. So remains to be seen at this point in time, but I think this will provide some stability after the initial high volatility that we don't see that often. I mean, if we look at the oil price, it tends to track sideways for many months. Or go into a nice trend. It doesn't always make these massive moves, which is what we've seen when the war broke out. So I think it's a bit of a return to more stability like the markets are expecting. What does that mean for the RBA? It means that there's more predictability in terms of their decision making, and they're not having to try to chase the oil price or chase inflation by these hikes that, then cause borrowers enormous grief. So I think now people can just have rest with a bit of sigh of relief.
Yeah, I mean, it's a step in the right direction, but let's be honest, the RBA is never the fastest one to act on anything, and generally they've been liking that 3-month data figure, which comes out next month.
Yes, exactly.
So probably August, you're thinking maybe a rate cut or no?
I think later.
Yep.
Either September or it'll be somewhere around before Black Fridays.
Oh, yeah.
My cynicism there. What will be the impact on government decisions around taxes and things like that? That's a much bigger question.
Yeah. I think watch that, and also watch those employment numbers. If they really start to get out of whack, then it's going to really put a rocket up the RBA to make a decision to start jump-starting this economy. But if you want the skills to analyse stocks, just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Janine, interesting one next.
All right, Alpha HPA Limited. That looks great, doesn't it? I mean, in terms of the way that it's been unfolding, we can see that it's really tracking along this. It's come back to that longer term angle there. This was the COVID pullback, which sort of took it out of whack of the angle that it was trying to maintain, and then it accelerated up. But it's come back home to that same angle again, so I'm liking that. Has it really tested that low yet? That's the big question. I mean, if we look at how this stock unfolds, it really tries to test the bottoms before it then takes out the low. Again, it's tested it. I think that there's huge potential here. I just think that it's a little bit too early, especially given, the angle of this one movement coming down. It could easily bounce around that 60, 70 cent mark again before we know that it's going to break out. But a breakout above this line will then take it well and truly through that $1 mark. It's about 60% to the high, but if it gets into a nice uptrend again, looking at what it's done in the past, we can see these moves are really strong. Here's 200% up on that move that it took there off the COVID low. We saw 688%. Now, I'm not expecting the same as what happened after COVID. However, given the degree of the pullback and where it is, and the fact that once it goes through that dollar mark, I'd be quietly excited about it.
Yeah, how interesting is it right now? I'm going to go a bit off topic, but we've seen, like as you said, the ASX, you look at it on a yearly performance, hasn't been anything exciting. It's definitely not the US. But at the same time, we're seeing a lot of these really strong, big stocks, even the smaller caps, mid caps, pulling back to that really long-term, momentum, which doesn't happen often. And sometimes that is the best opportunity when these stocks are resetting back to trend that you get for 5, 10, 15 years. And so right now, I think quietly our market is probably giving some of the best setups around the world. None of it's being spoken about. And if you don't know how to find these opportunities, you're not going to get them for another one for probably the next 5 or 10 years. So
people are all focused on the political agenda and the war, and they're not watching these sort of things, because let's face it, most people are not looking at charts yet. And this is going to change over time. We're going to see more and more people looking at charts and understanding how they unfold, because it's going to be critical for you to do that, to know what's going to happen to my super, for example. You don't want your super to halve when the market corrects. So better to invest in yourself now so you can at least read the charts and understand where the risk lies. Not just, it's great to follow us, but you can follow along if you know more and are able to do it as well.
Yeah, and I think back, even 20 years starting out in this and saying, what about that opportunity, for someone who knew in 07, who was on top of things, or, after the GFC or before the GFC? Like, these opportunities come once every 20 years. And right now we're getting inklings of the setups that are going to last the next 5, 10 years. So when they say now's not a good time, I think, like Janine said, go and have a look at some charts, go and get educated to really understand the opportunities that you're missing out on right now in the markets, because they are very, very good opportunities that probably won't come around for a long time. But anyway, let's move on to our next stock. Pedro, what have we got, mate?
All right, next up we've got Patriot Battery Metals. So this is a company that as the name suggests, is got to do with minerals that are in the battery space, notably lithium. There's also other two, if I can pronounce these, probably it's caesium and tantalum. So I believe that they're also important for battery metals. But let's get onto the chart and see where the opportunity is and have a look at that beautiful bottom, that V-shaped recovery that it has had. Now on the monthly, you can see that it IPO'd back here in 2022. It had an initial rise of 66%, but then it couldn't hold on to that and it ended up closing 33%. And this is what happens a lot of the time with these types of IPOs. They could be even for a year just trading sideways or even above the IPO price, only to eventually fall. This is why it's good to have that data on the chart. And I think that this is a perfect time to be looking at it because it's already had that flush out. Now we're seeing a sustained uptrend from that low of 2025. Have a look at that. You can beautifully just perfectly put these troughs there aligned to that momentum. And if I've put that level here, which is a notable support level back here, it's the $1.28, and that would indicate roughly that 100% upside if it does get to that. And looking at this chart, it doesn't seem that's out of the question for this stock to do that. When you think that over, from October 2023 all the way down to August 2024, say if you go 1 year and you go to that, October 2024, it had a fall of around 61%. Well, I would say that if the volatility comes back into it, then it's not unlike this stock to be able to do that 100% within the space of a year. And maybe looking at June 2027, which is in a year's time, it may be up to that 128 level. But let's have a quick look at the weekly. And the weekly is showing a beautiful picture here with price going up and volume also going up. Have a look at that. There's more liquidity coming into it. It looks like it's got two gaps, one gap to the downside, one gap to the upside. I wonder which one it's going to fill first. It might actually trade down. It might actually just come back down to this momentum and then come back up to fill it. Of course, anything is possible. We're not saying that, buy this right now and it's going to give you 100%. It's only going to go up. No, you have to know how this stock moves. You have to just have a look at, price pattern and time all together, and it will give you a better picture and indication of when to time the entry, because that's what's important here. You don't want to get in, just buy it now off a whim and then you see it fall that 18% and then you start thinking, well, have I lost my money? You start to sell out only for it to start trading up again. So you want to get in the best position possible from the beginning. You make your money when you buy right. That's a real takeaway here. But I really like this one. This one's looking beautiful.
Yeah, fantastic. All right, Janine, can you top that one?
Oh, can
I'm
I
sure
do
you
that?
can.
Look, someone said to me the other day, if you haven't got much data on the chart, what do you do? And that's a really interesting question, isn't it? And if you're not experienced or you haven't had training, you wouldn't have a clue. However, looking at the chart right there, we've got Digico Infrastructure REIT, DGT, is an opportunity. Now, what's interesting about this one is this is the monthly chart, okay? So we haven't really seen a big retest of this low just yet. That's the first thing that I notice. And then if I go to the weekly chart, I can see early signs that this is looking really a potential setup for higher prices. Now, in this pullback here, we saw 3 strong moves down and then it hit the bottom and bounced and fell away. Here we haven't actually seen a full test of this level yet, which is what you'd wait for. Now, the next thing to look at here is how far did it go the last time it went up? 75%. We're looking at what it did off this bottom here, and we can see that it's done about 90%. So it's in that sort of order. Now, if this stock finds support at this level, it's $4 is really an easy level, the next level for it. It's a question of whether it's going to go to $5. It could do. Once it's in a nice trend again and turned a corner, it may be on the up and up after that. But first of all, we need to be patient and wait to see that move.
Yeah, and what I find really interesting about this stock is when you talk about REITs, I know, especially on the retail end, a lot of the consensus around REITs is still the mentality around, commercial offices or residential. But the REITs are changing, silently changing underneath the surface. They're getting into warehousing. They're becoming data center plays. This is one that fits that bill. It's almost a tech play, a tech REIT play. And if you're still treating REITs today like you were 10 years ago, times have changed. Not for all, but especially for these ones. So be mindful of where this one is in terms of its area, and maybe do a bit of research on it, because you'll find it's in a very interesting spot with a lot of demand.
How many years did Elon Musk say he'd have data centres up in
Space?
Yeah, is it 5?
Something like that, yes. Yeah.
Yeah, so I mean, these data centres which are on the land have got potentially another good 3 years, haven't they, really?
Well, you know, that whole SpaceX story is a very interesting and a debatable scenario where it goes. I mean, some are saying it's going to go to the moon. Others, the more realistic ones, are probably going to see it dump.
Yeah, exactly. Did you hear about the, apparently there was somebody, or a lot of money went into a stock that had a similar sort of code or something.
Oh, yeah.
And they pumped that and dumped it.
Yep.
Probably when they realised they were in the wrong one. But it's just what AI or what tech does. It puts around rumour and then people follow it.
Yeah.
And look what happens.
And we know with IPOs, especially these mega ones, when reality sets in, that a lot of times in history, direction has been down, not up.
We talked about that, didn't we? Was it last week on our show?
Yeah.
If you've missed it, make sure you watch that one.
Yeah, very good talk about SpaceX. But let's get to our next stock. Pedro, what have we got, mate?
Yeah, next one we've got Telix. But before we move on to Telix, I just wanted to voice my comments on that earlier one, Digico, that REIT. So that REIT is actually a pure data center play. I did a bit of research for the show on this one, and they've actually sold 3 of their assets overseas, and they're focusing mainly on their Sydney asset. They own a data center in the middle of the harbour where all the cables and infrastructure are. I think that this one is looking quite nice myself. The fundamental story is there, and it's paying a good dividend. So I think that this one is definitely worth a watch, as we've seen the data center plays actually take off. So I just wanted to quickly touch on that. Now, Telix, healthcare, another sector that has been sold off quite heavily, and this was a market darling all the way back from 2002. Actually, you could even go back further. It's from 2020. Really, after COVID, this one flew. It went up 1,400%. And this one was one that we used as an example multiple times because it beat all the cryptocurrency, all of these meme stocks. You know, you could have just invested in this one during that time, and you would have made a lot of money there. So right now, it's coming back into trend. If you have a look from that low in 2020, where it initially came back and touched it and then accelerated to the upside from around that point there, it's actually come back and now retested that long-term momentum. So I think that it could be on the verge of accelerating once more. And I'll take off this trend line there. I think that it could actually, if it does support this newfound momentum, then we could see an acceleration, much like we saw back here, in the same type of tangent. Because when you overlay it, it's actually roughly around that same acceleration momentum. So Telix, I think that it's very interesting. All the volume is there. It's forming an interesting pattern here. So for the students, I challenge you guys to have a look at this pattern here from Module 5. And back test it and see if it's actually presented itself in the past. But this is a very interesting one, and I think that this one could actually go to that 100% level quite easily. When you think about that, 100% is back up to that $28, which really that's where most of the price action was happening around that period. So I'll just be waiting for maybe a trade above this level there. Even if you were to wait for that level to break, then you could actually eke out 100%, even up to the all-time high there, so up to that $31. Very, very nice.
Yep, fantastic. All right, well, time for the best stock of the bunch, Janine.
Oh, I can't just stick at one, so it's going to be quickly before he says anything. Telix. DGT I do like, and I also liked SBM as well.
Yeah.
That looks like it's got some potential there.
Awesome. Pedro?
Janine, you had to go first, didn't you? I actually agree with all of those. There would be my 3 picks, but I'm going to narrow it down to just one. And for me, it has to be Telix. It's a tough one between Digico and Telix, but I think this one has a lot more to come back, a lot more story behind it.
Awesome. There you have it. Best of the bunch, Telix. Now, moving on shortly, we're going to get into our hot stock tip. But first, let's answer your questions. Peter writes, one to look at for next week is Almatoni Industries Inc., AII. On opening today, Friday the 12th of June, it's up 48.5% since yesterday. Wow. Now, Janine, I want to get you to have a look at this one because what happened following the 12th of June is the more important story about why one should not get excited so quick.
Why is that? Because it fell straight after.
Yeah, which is...
Just have a look at the chart, then you'll know what I'm laughing about. Yeah, so what you're saying is it rose up, so that was the 47%, and then it closed here and then fell back down 26% and is now 21% down from where it was. Wow, huge. You know, what do you say to that? It's just the volatility, incredible.
But I think the most important part for me anyway from that story is one day doesn't make a trend, one day doesn't make a trade, one day doesn't make a really solid entry. Context
so how many people jumped on that and then got stuck?
Especially after a stock that's been up thousands of % over the last couple of years, looking really parabolic. One day when you read the newspapers, you see 45% up, you see all the media writing about it, and then you go, well, what can go wrong? It's very bullish, I should be buying. This is why you need to look at charts. Oh, exactly. This is why you need to understand context.
Exactly. And look at that. I mean, it just came right back, filled that little gap that's there. These big outside swings are just showing that somebody was just sucked into the news potentially, and then they offloaded it.
Yep.
So, you know, the safer place to wait, and we often show this, is when a stock's getting to these really nice highs, is actually to wait, you know, until it gets through a lot of this noise. But had you gone into the stock while it was going through there's no checks and balance for you because of the way the stock unfolded. So had you done the work with us, you would have been looking at this in a completely different light, I think.
And just on, you know, a stock gapping up 45% in one day, for you, when you look at that, I mean, do you then get ultra excited and say, now's the time to buy, or?
No, straight away look at the news, what's happened, and if there's nothing there, then I'll wait a day. I wouldn't make a trading decision based on news or a fast move on a stock at all anyway.
Yeah.
So, you know, you have to reassess the trade after that as well and decide whether it's still worth getting into. But what people are doing is they're on their phones, and that is so easy to be taken because you're sitting on a phone, you haven't put any context around it, you haven't done your own analysis, and, you know, a buy opportunity potentially comes up and lots of people go into it thinking that they're onto something good, and then the next thing they see it's down 20%. Well, what just happened? They'll have no idea. And then how do they sell? You know, that's the hard part, isn't it?
Yeah, absolutely. Pedro, I want to get your thoughts quickly on this email as well before we move on, and what you think of the stock in terms of where it's heading next.
Yeah, that doesn't look very good. That reversal on the day, that looks like a little bit of a pump and dump and sell on the news. So in terms of the chart, I mean, it's already gone quite parabolic. The question is, why do you want to be in this? I mean, yeah, it looks great, this long-term rise, but how much more does it have to go? Can it do this again? Just because it's done this from 2025 up to this point doesn't mean that it's going to do it again. I think that there's better stocks to look at, although it does look like it's become a little bit more liquid. I'm not too excited about it, to be honest.
Yeah, all right. Well, let's move on. Alex's email is next. GPT has made a very bullish weekly move. I'm wondering what you think of the real estate sector if the war ends and interest rates go up again. Well, they might be going down Alex. But Janine, your thoughts on?
Yeah, I mean, that's really what we want to see. If the interest rates drop, then these stocks are going to go up. So looking at GPT, I really like it from a long-term perspective. So good one that you've picked here. So a more conservative entry is above these tops here, just because it's hit its head so many times at around that level. But looking at it now off this bottom, it does look really nice the way that it's actually tested that low and then taken off just recently. But let's have a look at the monthly chart and expand that up, because these sort of stocks, if they take off the way that I'm thinking they could, it'll change my view about the timing of the peak of our market.
Yeah.
So if we get a strong move up through this high here, we're talking about being bullish for much longer. And look at the banks. The banks have pulled back.
Yeah.
And if they turn around and start taking off again, then that's going to be a really good story, I think, too, for a lot of investors and traders. So at the moment, I'm liking it. But if we see this short-lived and then the stock reverses, so that's really a risk right now. We can see that there's some resistance around these levels. If this actually runs out of steam and then it just goes sideways for a while and pulls back, don't even think about it. That would be the complete opposite scenario.
Yeah, good advice. All right, well, let's get to our next email now. Jake is next and writes, can you please look at the short-term technical analysis for TWE and Kogan? How does it look like next 6 months for each? Now, we can do one for you, Jake. Maybe we'll look at TWE next week, mate. But Kogan for now. Pedro, how's it looking?
Look, Kogan could have actually been one that we included in this 100% upside potentially, because I think that it's looking quite nice. Let's get onto the chart. Obviously, this is an online retailer. Let's start off with the monthly here. And this level, I know we've covered this stock before. This level here at around that $2.80 to $3 has been very, very important. And it's been a springboard for previous rises. And right now what it's done is it's had this sustained uptrend. Now it's had this downtrend. And possibly now we could be on that next rise. And like we have previously, back in 2018 and 2022 when we had that start of the uptrend. So we could be on that period there. And even if we go to the lowest percentage rise, that's 214%. That's the smallest amount of rise that it's had compared to this one back here in 2017 and 2019. So looking at the weekly chart, I do like this range that it established and the fact that it has broken out of it. If I put just a rectangle here, that was that kind of that price agreement zone where that range that it's traveled to, it's actually broken out of it, and that is a very good sign. It's broken out of all of that noise there. Yeah, buyers are starting to come back in. I would say that the next potential level to look out for is going to be around that $6.40. That's where it might have some short-term resistance. So to answer the question, I think short to medium term, it's got a possible 46% upside. Of course, there is the possibility that it comes back to this range and then retest that $3.40 level, and that's a negative value of a risk of 20%. Or obviously, if you put your stop loss a little bit closer, maybe on that low of that previous bar at around that $4, then you're risking a lot less. But then this comes down to the strategy that you're using. Obviously, there's plenty of things that you could use for your risk to reward and for your money management. Obviously, we cover that straight from module 1 because it's one of the most important things to understand is your risk to reward and your money management before you start looking at the technicals. But I think that this one is looking very, very nice. And another cluster that I'd like it to get across is roughly around that $4.70. That's going to be kind of like the earlier period. But I think you picked a good one. Stick with it, put a trailing stop loss, and just ride the wave up.
Yeah, fantastic. Sounds like you picked a good one there, Jake. The team like that stock. But let's get to our hot stock tip for the week. Pedro, what have you got?
The hot stock this week is Recura Oncology, which came out with some big news today. Now, the company has strengthened its balance sheet, raising $34.3 million to fully fund 3 key cancer trials, including its flagship AML program. While this isn't a clinical breakthrough, it significantly reduces funding risk and allows investors to focus on upcoming trial results, which will ultimately determine the company's future value. Now, let's get onto the chart to see what the technicals are showing us. Look, I just wanted to say a quick thought on this company. I think it's great. I'm wishing them the best because they are fighting the fight against cancer. So I'm glad that they've received funding. I think that a lot more funding should go into these types of companies. As a human race, we should be focusing on healthcare above all. Yes, we want to get to the moon and Mars and all that, but I think that we should also focus on living longer. And you might start to see more money flow into the biotech space. This is a biotech play. I'm thinking that in the next, once we get over this whole AI hype, we might start looking inwards and start thinking, well, hey, we probably should start being a little bit more healthy and living longer. So that's my thoughts. Let's get onto the technicals of Race Oncology and have a look at that beautiful sideways consolidation that it's had. Yes, it's trading down at the moment, but it's trading down to the bottom of the range. Let's quickly have a look at the monthly chart first and see what it's done. It's had a stellar run since 2019, all the way up to that high. It went up 2,800%. Only to get sold off again. But usually companies do this. They have that expansion and then that contraction period. And right now, it does look like it's in that expansionary period again. The real risk here is that it does come back to that momentum. But before it gets to there, it's actually got some very strong support around that $2 mark. So if it does hold up around that $2, it could trail sideways, maybe until 2028, until it reaches that momentum, which, I don't think that I would put a high probability to that. I'd say that the most probable thing it will do is that it will, much like TLX, it will actually establish a new momentum and start to shoot off. But we need to start to see some positive clinical trials come out of the company. A lot of these biotechs, they suggest they rely on FDA funding and FDA approvals, things like that. It's a lot of the time when that news comes out, that's when you see these rises. They're quite dormant while they're waiting for that type of approval. But the fact that it's having this type of action where you start to see lower peaks, right? But you also start to see a base established. So price is compressing at the moment, and eventually it's going to have to make a decision. Are we going up or are we going down? And have a look at this period, a previous period here. Does it look familiar to here? It definitely does. So what happened back in 2024, it had that initial rise, and then until further news, it just gets sold off. Then we've got a bit of positive news comes out, and then it's waiting game again. And then surely this would have been positive news that came out, in terms of FDA or some clinical trials or things like that. And then now it's in that selling off period. But eventually it does have that spike. So I'd definitely be keeping an eye on this. Let's see how long it actually took from that peak. It was 2024 until that next rise. It was 2025. So 1 year down until that rise. And then here's 2025 until late 2025. So not even a year. So right now it's October 2025 and we're up to June 2026. So it hasn't quite been a year yet. So if it's anything like this previous period here, that it sells off for about a year, maybe that's how long it takes to get these trials underway. It could be a certain cycle. I'm not an expert on healthcare, but it could be determinant on those type of trials and how long they take. And then when news comes out, if it's positive, then we start to see that price. But if you're looking purely at the price action, it's established a new low back here. If it holds, if that $2.30 holds, then I think that it's looking quite healthy. But wishing this company all the best, and I'll definitely be keeping an eye out for the share price.